I certainly believe they should cut interest rates. Growth needs a further impetus.
I think the next monetary policy is coming up in the first week of December. So I would like to reserve my comments for that.
India is known as the heartbeat of Unilever. It is an important pulse of the Unilever business.
India needs to improve ROTI, R-O-T-I, return on time invested. We have to move from parathas and everything else, kulchas, to getting really thin, good rotis which give us quick results.
We have been the biggest beneficiary of birth of cnbc TV 18, personally as well as the firm.
Top policymakers, corporate leaders and market experts have congregated in Mumbai as CNBC TV 18 celebrates its Silver Jubilee. Here's a quick recap of the big newsmakers and the headlines. The first big newsmaker of the day is Union Commerce Minister Piyush Goyal. He called for the RBI to reduce interest rates and give growth a spurt. Speaking at the Global Leadership Summit, Goyal also called for food inflation to be de-linked from the headline inflation. This was also a recommendation made by the Chief Economic Advisor to the government in his last economic survey. RBI Governor Shaktikanta Das was also at the event. When asked about Minister Goyal's remarks, Governor chose to keep his cards close to his chest. Take a look.
I certainly believe they should cut interest rates. Growth needs a further impetus. We are the fastest growing economy in the world. We can do even better. And frankly, the largest component of inflation is food inflation. I think it's an absolutely flawed theory that food inflation should be considered while deciding on the interest rate structure. Food inflation has nothing whatsoever to do with managing inflation. That's a demand-supply situation.
Just before you came on, we had the Union Commerce Minister telling us that he's worried about interest rates and was asking that food inflation should not be counted, that there should be an interest rate cut. Any response at all, sir?
I think the next monetary policy is coming up in the first week of December. So I would like to reserve my comments for that.
Commerce and Trade Minister Piyush Goyal also called on India Inc. to get competitive with pricing to tap into the demand India has to offer and capture market share. He also welcomed Elon Musk's Tesla and all global electric vehicle makers to set up shop in India.
I think it's time that industry also and businesses also look at consumer choices and consumer demand for more attractive pricing. I think if smart business people start offering better pricing, better value for money, I'm sure the market will give them a boost. I personally am one of those who believes that economies of scale, that the huge demand that 140 crore Indians provide, the demand of 1.4 billion aspirational young India, the demand that our growing economy, our growing income levels offers is unmatched. That's a choice that Mr. Elon Musk will have to make. We will be very happy to welcome all the companies from across the world to come and invest in India, to make electric vehicles in India. This government over the last 10 years has consistently focused on sustainability. We are giving a number of incentives and schemes to promote more and more adoption of electric vehicles through our FAME scheme, through the recent PM e-bus Seva Yojana.
And from one big newsmaker to another, RBI Governor Shaktikanta Das cautioned that risks of inflation are coming back globally despite a soft landing. But he also said that Indian economy is sailing smoothly despite global turbulence. Delivering the keynote address at the Global Leadership Summit, Governor Das asserted that the RBI is taking a very consultative approach to expected credit loss framework.
With regard to the ECL framework, that is expected credit loss framework, even after issuing a discussion paper and receiving stakeholder comments, which we got examined by an external working group, we now propose to issue a draft circular for implementation of ECL. So the draft will be followed by issuance of a final circular. Again, we will get comments, and we are adopting this very careful approach because it, the introduction of the ECL framework marks a major transformation in the way, the assets, the stressed assets or the buildup of stress or the way the assets get classified. Today, India's economic growth remains resilient. Inflation is expected to moderate despite periodic humps, and the external sector is robust. Without being complacent, let me end by saying that the Indian economy has sailed well and sailed very well through the prolonged period of turbulence, and it exhibits resilience in the face of constantly emerging new challenges.
And speaking of inflation, the wholesale price index for October accelerated to a 4-month high of 2.36%. This was largely due to a rise in food prices. Food inflation quickened nearly 12%. Potato prices are up a massive 79%, and onion prices are up 39%. Onto the market action of the day. Sensex and Nifty declined for the 6th straight day as the sell-off continues on Dalal Street. The losses were limited today as the market swung between red and green for large parts of the trading day. Mid-caps and small-caps managed to buck the downtrend today, but this has been another week of sharp losses. Sensex and Nifty declined 2% this week. The mid-cap index is down 4%, and the Nifty Bank index is down 3%. Barring the IT index, all sectoral and indices ended the week in the red. Here are some top market experts at the CNBC TV 18 Global Leadership Summit with what they make of the current market environment.
The price that you pay is the only thing you control as an investor. So when there are times like what we're going through now, is not the time to lose the faith, but to actually double down. So enter at good prices. The soil in India is fertile for entrepreneurs and business. So stay the long haul because you will compound a lot of money. And 3, back the right leadership. You can be in the best business with the wrong jockey on the horse, as you call it. But if you find the right jockey, he's going to make even a stupid horse run well.
What has happened for the first time in 75 years, I don't think people have understood that, is that first time a US president has unchecked power. He has the House, the Senate, the White House, the Supreme Court, the popular vote. If any Republican opposes him, he will use his base against them, so they will not be elected. The Democrats are in a state of shock. They cannot do anything because they've tried impeaching, prosecuting, criminal trials. Nothing has worked against him. And now the worst fears of the America First MAGA movement can now be seen being implemented. So I'm really afraid that they might say, we'll put tariffs on there, which are economically suicidal to do.
There's a clear challenge in the earnings not coming through. And so when does it work? Like Dr. Narayana was saying, the demand, at the end of the speech he said, demand has to be looked into and it should be discussed. So I think what all macro managers they will do as we go forward, it will come, right policy decisions will be taken at right time. So we have to have a little more patience. Maybe the earnings growth may take another 6 months. Next year could be roaring one. So, but it will come, that much I know.
India's trade deficit surged to $27 billion in October from $20 billion in September as imports grew faster than exports. Goods exports rose 13.4% in October, reaching $39.2 billion, but imports climbed 20% sequentially to $66.34 billion. The widening gap has surpassed economists' expectations. Kotak Mahindra Bank founder Uday Kotak shared some ideas that could help India transform by leaps and bounds in the next 25 years. These include a disproportionate spending on defense, more open trade borders, among others. That's not all. Kotak also said that India needs to improve ROTI, his self-coined acronym for Return on Time Invested.
You're getting into a world where power is power and raw power will matter. If India has to become a global power of a scale and size which we aspire for, India needs to disproportionately get stronger on its defense from where it is. I see a lot of global companies having their brands in India. I would love to see more Indian brands globally. There are so many businesses here which must have the courage to go out and say that we will have our brand, consumer brand, globally. And frankly, on that, India is a long way away. If you look at quick service retail, India is a unique country where it is working. Most countries in the world, it has not worked. So that's where Indian innovation has made it work. It's a very good sign. It's positive that we can do things which the rest of the world has not succeeded in. And from that point of view, some of this value creation in India is real and sustainable. There's one thing for India to transform into the future. India needs to improve ROTI, R-O-T-I, return on time invested. When we look at execution of projects in our country, anywhere, I'm not talking private sector, public sector, wherever it is, chalta hai. ठीक है, approvals have taken us 6 more months. I've got labor shortage. I don't have this machine imported. The concept of time and importance of return on time invested. Therefore, India has only 23 years to go. And if you want to be a developed country with $15,000 plus per capita, this kind of roti is a tough one.
On that note, it is time for us to head into a short break. But coming up next, more newsmakers from the Global Leadership Summit. When we come back, stay tuned. Welcome back. CNBC TV 18 is celebrating its Silver Jubilee with a grand Global Leadership Summit with top policymakers and corporate leaders. FMCG firms have been under pressure due to urban demand concerns. Addressing this, Rohit Java, the MD and CEO of Hindustan Unilever, said that it was time for the company to focus on increasing market share and improve the quality of their brands. He added that now was the time to keep calm and carry on, and that demand would make a comeback.
Give or take a few quarters here or there, and we had rural discussed a year back in a similar forum, and now rural is coming back. We're discussing urban today. So we should just stay the course and remember to do 2 or 3 things. Number one, focus on becoming better every day. So be superior, offer our consumers the best solution. So focus on market share. Number 2, increase the quality of our brands, make sure that they are the most unmissable, and keep investing in market development. Because this market is about development of categories and growth, so therefore we must stay on strategy, come what may, in whichever market conditions. So that's what I'm telling myself and everyone in the company. Keep calm, carry on, and keep developing the market and investing for the future. Most categories certainly we play, which is totally free market, is very, very competitive. We compete with local players, regional players, global players, D2C players. So I think pricing, we have to be very, very lean to make sure that we are just rightly priced for our brands, and we have portfolio brands ranging from Clinic Plus on one end in hair to Tresemme, and we'll be going up further in that market. So we serve all segments, from 1 rupee sachet all the way to a 600 ml or a liter bottle.
Rishad Premji and Rajiv Bajaj, the 2 honchos at 2 very successful legacy companies, shared their views on leadership at the summit. While Rishad explained why differentiation was key when it came to hiring talent, Rajiv Bajaj had an advice for budding business leaders: keep reality first, theory last.
You should look for people who are very different than you. They challenge you. They make you uncomfortable at times, but they're highly functional. And that comes from diversity of experiences, right? That comes from diversity of industries you've worked in, roles you've played, gender, ethnicity, sexuality, your life experiences. It just comes from being different. And I realized at one point, many years ago, I had someone in my team, but every time I had to review him, I was stressed. I was like, he's going to push me, he's going to ask me difficult questions, etc., etc. But I found that brought out the best in me. So I'm a big believer in trying to find people and keep people in your team that are very different than you. You don't necessarily have to be friends with people you work with.
Again, it comes back to being agile, to adapting to the future, and doing it in a certain way. Again, to explain myself, I will use my experience from yoga. Guruji Iyengar once told me, the purpose of yoga is not the asana. The purpose of yoga is to use the asana to know yourself. So my goal at Bajaj actually to win is Bajaj should become the most boring company to work in.
Okay.
Whether you're working in R&D, operations, supply chain, marketing, there is no need for so much activity and noise and strife on a daily basis.
Okay.
And outlining their 5-year growth plan, Peter Elbers, the CEO of Indigo, expects the firm to double in size over the next few years, while Rohit Java, managing director at CUL and CEO at HUL, said that the company will focus on gaining market share across segments over the next 5 years. Take a look.
If we want to compete and bring India to the global stage, we need airlines matching that size. And Indigo clearly is going to be one of them. We're going to double in size in the next couple of years. Today we have a little over 400 aircraft and we have another 950 on order. So that's sort of the growth trajectory we're in. The value-conscious consumer will be there, whatever market segment you're in. And I think at Indigo we serve all these different market segments. But that in itself, and I think that's an incredible asset for Indian companies, because if you can address the Indian market, the value-conscious, price-sensitive, cost-driven market, you should be able to compete international. So I'm very confident that with our international expansion and our Indian cost levels and competitive levels, we should be able to compete.
Most majority of business continue getting share. And the way to gain share in a market as exciting as this in the medium term is to grow the market, because that's really how you get more competitive.
Okay, so gains in market share while growing the market. Peter, the number.
I would line out the number of 200 million. Today we welcome 3 lakh customers a day, 100 million a year. By the end of this decade, in 5 years from now, we should be double the size what we have today, 200 million a year.
200 million a year, that's a good number to go with. Santosh.
Wow, I heard doubling in 5 years by certain pundits here on the stock market side, but at least for automotive, even if it is 1.5 times, so 4 million going to 6 million should not be bad in terms of automotive market.
And with that, it is time for us to head into a short break. We will be live with the Global Leadership Summit in a couple of minutes. Keep it with CNBC TV 18.